Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hello, and welcome back to the Massive Passive Cash Flow podcast. This is Gary Wilson, your host. I'm glad to have you back. We got a couple of great guests today, Nick and Earl from the great area of Boston, Massachusetts, and the surrounding area. We'll get to Nick and Earl in just a second here. Nick and Eric, excuse me. So before we do that, though, if you haven't done so, please subscribe to the podcast. It's on a number of different channels: iTunes, iHeartRadio, Stitcher. The podcast is being downloaded in, I think, 50 different countries. So also, by the way, we've been attracting a lot of real estate agents in the last several months, and these are not your typical agents. They're we call investor agents, and they're trained to work with you and I. And I know they're trained because I've trained a lot of them myself. They're certified. We certify them, certified investor agents. They know how to identify, analyze, and negotiate deals on and off market, which is a big deal. And they literally have access to every single parcel in the country, residential and commercial. So you've got to look for these guys. They're out there in 25 states now. So just go to the website, realestatewithgarywilson.com. Click on the members area, and in there you'll see on the left, if you're a member, you know what to do. On the right is if you're not a member, and you can try it out for 30 days for free. And you can grab the books, the websites, the recordings, everything you want, completely lock, stock, and barrel for free. And on the community site, you can identify your local investor agents there. So in any case, without further ado, Eric DiNicola and Nick Earls, welcome aboard, guys.
Hey, Gary, thanks for having us.
Well, I'm glad to have you here. I love the subject matter. I love your experience. And but before we get into the meat and potatoes and maybe a couple examples, would you mind just painting a picture for everybody? Because where you are is a great area, and I want people to know where you are. And just give them a little bit of background, and then that'll give them some context.
Yeah. So Eric and I, lifelong friends, almost for 20 years now. Met each other when we were kids, and we're Massachusetts natives. So most of our real estate investments, or all, I should say, have been in the Massachusetts area, mostly in Boston and the surrounding communities. Really strong life sciences industry here in Massachusetts, especially Boston area. I like to say you drive in any cardinal direction right now, and you'll see some lab space being built. So we've built our business around a big section of the business. We've got a couple different sections, but the main section has been condominium development, because there's a lot of high income people moving into the city, and the city has a lot of red tape and bureaucracy involved with new construction development, which kind of leads to a supply shortage. And you got a population that's booming, lots of new jobs coming in, and that's a high income population that's coming into the city. And then you have a supply shortage that's led to prices kind of going through the roof over the past 10 years. And we've kind of been reaping the benefit of that. We've done a lot of condominium projects. We've got them entitled ourselves, which we can talk about more as we go along. But that's been our bread and butter. And we're doing a lot of different stuff up here. We're doing some affordable housing, and we're also doing a office conversion to apartments right now.
Awesome. Yeah. Well, I love the area. I've been there a number of times over the years, taught many classes up there in and around Boston, and actually taught a class at the Harvard Club, a room full of PhDs, doctors, 132, and I was the only guy in the room, I'm pretty sure, that did not have a PhD. But I tell you, they were on their feet at the end, because we were talking about this what you just talked about. That's exactly what we talked about. And I said, you guys, it's right here in your front yard. It's right in front of you. So in any case, it was kind of neat. But so let's do this. You touched on a couple of things there, and something that's kind of near and dear to my heart is the office space, because obviously with the virus, everybody was being told stay home, work at home, and I knew instinctively there's a certain segment of society that's going to get used to that. I've been working from home for years. Matter of fact, even when I started my own businesses, the first office we built, I built the building. I built an office for myself, and I realized in a few weeks, I think, I'm never there. I'm going there just for the purpose of saying I'm using my office. So I gave it to my commercial director, and I said, "Here's your office." I work from home. I work out on the deck. I work in driving around the area. So what's interesting is I knew instinctively when this started that the office space just wasn't going to sit empty and go away. Entrepreneurs are entrepreneurs, and we're very good at being creative and innovative. And I really do believe that there's going to be a home, quote unquote, home, loosely used for all office space. So if you could touch on that, what your thoughts and ideas are, what your vision, and even some examples you're looking at, that would be awesome.
Yeah, absolutely. And one thing you mentioned, Gary, when we were kind of talking off air initially was rarely when we told you about this sort of venture that is part of our business now, rarely do you see buildings just, buildings that are abandoned or completely, left to crumble. Something will happen. They'll go to a new owner. There'll be a new use. They'll be brought up to their highest and best use. So we have a situation right now, be kind of a specific example. I guess I'll get into that in a second, but more so generally speaking, we kind of have a similar view to you in terms of, people are starting to work from home. We've seen this now for 2 years. You had been for a long time. A lot of people have. There's a lot of underutilized office space out there where, maybe it's sitting above retail. The retail's still working. Maybe it's been vacant since before the pandemic, and it's just very underutilized. Thing we're dealing with now, to get into the specific example, is a very underutilized building in a satellite city of Boston. There's sort of a main historic corridor. You're seeing a lot of these buildings that were built in the 1800s, where the first floor retail, there's tons of retail, CVS, sub shops, sort of new stores, mom and pop stores. It's really vibrant and happening. But then a lot of the space above is just vacant. Some of the floors are, an entire open floor that are vacant. Some have, divisions, office divisions, walls in there that are just maybe a few of them have tenants, and then 80% of the building is vacant. So what we're looking at is opportunities like that, where maybe we can come in sort of like a covered land play. We can keep the tenants on the first floor, the retail tenants that are still operating their business, and then start working on the top floors. And what we're noticing is the cities we're looking at, they're a bit more friendly towards developers, and they say, we want you to come in and do this. We'll grant you a special permit to do this. So we kind of will give sort of a conceptual plan after our architect walks through the whole building, measures it out, and says, okay, this floor it's say the whole building's 50,000 square feet. It's 10,000 per floor, 5-story. We keep the retail, and then he figures out a way where we can fit as many units based on sort of the area, what people are renting. Say they're all 2-bedroom, 1-bedroom units into this sort of shell. And then we kind of just work on how much would this cost? How many, appliances do we need? We like to break stuff down when we're dealing with construction or rehab to a per square foot basis. So we can really analyze, okay, this is what we'd have to pay to buy this building. This is how much rent we'd be taking in from the retail tenants to sort of cover this as we go. It's probably not going to cover the whole building, but it covers some. And then we kind of work with the city if they're open to it, get a special permit, convert it to residential, and then hold on to it and rent the units. That's kind of the goal right now for this specific arm of our business.
Nice. Yeah, I know historically, and this is a generalization, it's usually easier if you want to rezone something from commercial back to residential versus going the other way,
Yep.
Especially in an environment now where there's an acute shortage of housing in a couple of different sectors, In fact, we'll touch on one a little bit, which is the affordable housing sector, but one that's really growing dramatically is what we call corporate housing. And these are traveling nurses, traveling executives, or contractors that have, they all have short duration contracts, somewhere between 1 month and less, greater than 1 month, less than 12 months. Another example, and I never thought about this before, is the filming industry. Whenever they go to film a movie off-site, like in Boston, for example, or Pittsburgh, Atlanta, that entire film crew, and it's hundreds of people, involved with making a movie, they all need temporary housing, and they don't want to stay in hotels anymore. I mean, I don't either. They want to be in a home with a yard, a deck, and close, convenient. So there's a huge demand for that. It's one of the fastest growing sectors. So we've thought about that angle of it. You're already if you're in an office space, you're probably close to a population center or near population. And why not convert that? I mean, you've got the structure, you got the space, you probably already have plumbing, electrical, everything you need. So
yeah.
So I admire you guys for recognizing that and seeing and seizing the opportunity. And if you could, I kind of mentioned the term, the affordable housing. Obviously, in the last several years, it's not borderline strange what's been happening in our market. I mean, you've got exceedingly low interest rates, historically speaking, the lowest we've seen since the 60s in my lifetime. And if you look at the demographics, fewer people are able to afford their own homes. So more people are turning into renters. In fact, in 2011, Warren Buffett famously said, if something doesn't change, we're turning into a renter nation. And he said if he could buy 100,000 single family homes, he would do it. But he didn't do that. He bought Prudential, that's became part of the Berkshire Hathaway offering. So in any case, long story short, what's your take on that? And what do you see happening, or any vision or thoughts or ideas surrounding the whole world of affordable housing?
Yeah, we're very focused on affordable housing. So we actually have a project active right now in the city of Boston. We're in a partnership with the city where they put out what's called an RFP, request for a proposal. And they have, city-owned lots, and they say, hey, what would you guys build here? Or maybe they already had, plans in existence. It depends on the individual request they put out. This one's in a neighborhood of Boston called Roxbury, and it's 7 units, home ownership units spread across a couple different sites. So they're more, rather than like a larger apartment building, it's a couple different single family homes, a duplex, that sort of thing. That project is actually fully city funded. We're compensated via developer fee, which is a percentage of the total project costs. And, we put in like a % developer fee. That's part of the whole selection process. They'll look at the applicant's track record. They'll look at the team that you've assembled for the project, and they'll look at, how much you're proposing. What's your cut? Those are all factors in their decision. So we'll submit to that, and we got chosen for this project. It's our first one. And this is kind of, an interesting thing with affordable housing is how there's so many different ways you can tackle it. You could do, even our market rate approach, we're thinking affordable because we're in a very expensive state. In Boston, rent is through the roof. So we're looking at these satellite cities, as Eric said, where they've got the infrastructure. They used to be large manufacturing hubs in the 1800s. A lot of these satellite cities of Boston, they're called gateway cities, actually, in Massachusetts. And the rent is just that much cheaper that you're seeing people moving there. A lot of these areas were rougher, 30 years ago. And they've just been kind of on the upwards trend in the path of progress, so to speak. You're seeing crime rates drop. You're seeing population grow. And that's in large part due to the affordability. People are moving there that weren't willing to live there 30 years ago because they can't afford to live in the major metro. So we're heavily focused on affordable housing, both from the perspective of trying to get subsidized projects where we're working with the local government, or just a market rate project where we're thinking, well, people care about affordability. This is the place that we want to be. And as more people, move into those cities, unfortunately for them, the rent's going to increase. That's how it always works. So we'll be in a position to benefit from that.
Yeah. Well, I appreciate that. And it's, I've been in the business for quite a while. And what I was talking about before, this is almost a strange set of circumstances. You've got the cost of borrowing money is historically low, yet there's huge demand. Demand is far outpacing supply in the housing sector. And usually when that happens, by now interest rates would have gone up a lot more than they have. And it sort of tempers things. But really the developers, they're smart too, and they're developing. There's like they're watching where the puck is going. You plan, you want to position yourself to be where the puck is. In the future. 6 months, 9 months, 12 months in the future and beyond. So having said that now, and one of the tricks to being successful in real estate investing is to be very strategic and realize that in any market, there's always opportunities to invest. We're always buying and selling in any market. We just use different strategies. So when it comes to being positioned and having a balance in your investing activities and portfolios, what are your thoughts on balancing the long-term value add multifamily, which has been for me, it was all about multifamily for many, many years, but balancing that with the short-term profits from something like condo developments. It's not like you're flipping, but you're basically capitalizing on something that's a great need on the ownership side. So how do you guys work with that balance, or what are your thoughts on that and your vision and position on that?
You're right when you say there has to be a balance. I think that's something when we got into the business, we said, yeah, we have to just, start acquiring property and own it, build up a balance sheet, have passive income. But we saw an opportunity in Boston. I think Nick kind of alluded to this briefly at the beginning, where the condo market, there's a lot of high income individuals. The condos were really selling fast. The price per square foot, which is a metric we look at as far as the sellout number, was just continuing to rise. So we said, all right, you said it's kind of like flipping. You're absolutely right. It's essentially a flip on steroids. You're dealing, you might buy a 2-family, and instead of upgrading it and selling 2 units, you maybe knock it down and build 10, and you sell those. So definitely, it's a good bang for your buck situation. You get a nice punch of capital after only a year or 2 or 3 maybe. But then you don't have an asset that you own anymore. You sold it. You sold everything. You might be taxed on a short-term capital gains depending on how you do it. So that is something the last few years we've really built out, is building up assets that we own as well, concurrent to doing these projects. That's kind of where this office has come into play. Additionally, it's still almost like a flip in a sense, the thing Nick was talking about with the subsidized affordable development, but a little different. And we consider that sort of another variation to development, because those units, there's almost no risk with those. There's never a situation where, okay, maybe the market sort of changes during your construction and you're not going to get your projected numbers. You'll sell those instantly because there's a waiting list with the city of Boston. They're restricted to a certain price. So that's kind of another way we diversify within our organization. Still development, so still kind of our bread and butter. And no, we won't own those assets after, but it's another kind of way to protect ourselves. Because they say at the beginning, look, these 7 units will be sold at 100% AMI, which is to people who are making 100% of the area median income, or 80% AMI, or 60. And then those are fixed prices, and they're typically about a third of what the market rate would be. So there's a massive waiting list for those. So those kind of 3 ways we try to diversify and protect ourselves. And like, you're absolutely right about the development. It is something where you don't own anything after. And yes, you make a lot of profit quickly, but we're trying to expand those horizons a bit, and have been the last few years.
Yeah. Well, it's always good to have. I mean, the beautiful thing about real estate is it's a tangible asset that also
That's right.
generates revenue if you buy and hold. So you got the best of both worlds. And I know for me personally, this is I've taught classes in over 600 cities and towns in the country. Wow. But Boston just happens to be an area where I was there, more than some other areas. So it's just more people, so there's more people to teach. And I know, just thinking back, the last time I was there teaching pre-COVID was in 2019, and we were, condos were selling for like the mid 400s quickly, but now they're over 700.
Oh yeah.
It's just crazy. So I've got two really good agents up there on the team. They spread out. They're not just in Boston. They go way out. I mean, an hour and a half out sometimes to serve people. And that's what it takes. And you mentioned that earlier in the podcast is, you look for those gateway cities, and people will commute. or they'll telecommute or do like I do, is just work from wherever you are. Hey, now we mentioned the word flipping, and I guess we should satisfy the appetites of our flippers listening here. They're hearing all these numbers being thrown around and the things we're doing for buy and hold, but for the flippers, we kind of touch on it with like doing developing, but if you can latch on to some multi-units, the last big property I flipped that wasn't like a single family home it was one of my clients. It was a 15-unit building, and I want people to realize that you can flip big buildings, you can flip office buildings, you can flip anything, just like you can flip a single family home. But what can you tell the flippers who are listening about the whole kind of adding on to what you mentioned before, working with the developers, getting the multifamily assets, and really standing out, because other syndicators, everybody has their strengths and their weaknesses, but what you're doing here it really is kind of special, and you have also localized knowledge. But for people looking at this, I know and I'll let you answer this in a second. I remember when I was there before, there were a decent percentage of Canadians coming down, from Quebec City, Montreal, even Toronto, because they love the area there. They can drive there from Montreal and Quebec in Ontario and Toronto, all within like a 10-hour drive. They didn't go to the beaches and all that kind of stuff. But is there something more to it that I might be aware of that you can touch on there?
Yeah, I mean, I actually wrote a book that goes through the whole condo development strategy. You can get it at our website, https://winterspringcapital.com/development-book. But just to give you kind of an idea, I can go through a project we did a couple of years ago. Perfect. That is, I think probably if you've been flipping for a few years, this project would be very obtainable. If as long as you have a good track record. So basically we identified a 2-family parcel. It was on the market for $600,000. Quickly picked it up the same day it was listed, because we knew on that street, even though the zoning code said you could do 3 units, people were getting special permission to build 8 units and 7 units and stuff like that. So we said, okay, there's precedent here. And we picked this up. We went through the entitlement process, which basically just involves getting that special permission. You got to meet with the neighbors. You got to meet with politicians. You got to go to the zoning board of appeals. And basically just saying, look, this isn't a 3-family, but we have an oversized lot here. This lot is 40-50% larger than most of the other lots on the street. So instead of just going in and flipping it and turning it into 2 new units, we knocked it down and we got special permission to build 7 units. And overall that process, took a while. Say it took a little bit under a year in permitting, I'd say. And then another year of construction. So around 2 years total. But we made $1 million between Eric and I on that project, and we only had around 200,000 in.
Wow!
So we, huge multiple on our money. Having the patience and being willing to go through that political process, which can be, torture at times, because the neighbors don't like development, and the only people who show up to these meetings are not in my backyard types. But right. you deal with the pain, push through the pain, and you can get really good product. And that's a small job. It's only 7 units. It's not out of the realm of people who've already flipped. If you're doing multiple flips at a time, that project's very obtainable to you. You know?
Yeah, it's funny you mentioned zoning. I've been through a couple of those myself personally, and then recently as a consultant, I was brought in as a consultant for a client of mine, and they were buying a seminary where there was basically Franciscan monks that were, they had shrunk to maybe 2 monks, and they were being relocated. And they had this beautiful, like Frank Lloyd Wright style contemporary building that was some minor modifications. You wouldn't even really know it was a seminary or even a church. It has a chapel there and everything. And we wanted to turn it into assisted living. There's a giant need for assisted living right now and independent living facilities. And you're thinking, well, that's good for the community. Beautiful land. I mean, there's big giant buildings around it. everybody that came there for the most part was fighting us on it. We're like, we don't understand.
Yeah.
If you don't do this, it's not like it qualifies for a million other uses. It's not going to be a church anymore.
Yep.
I mean, I hate to say that way, but it's true. But the thing is, we had to go back a second time. We actually won this. We lost the first time and won the second time. And what I did is I changed my approach, and I just basically preached to them. I said, look, here's the cold heart. And it was an area I invested in before personally. So I knew a lot of the people, and I was look, you don't understand, if you don't do this, it's going to be an eyesore. Okay. In any case, long story short, a ramble there, but you do have to be persistent. That was the lesson there is if it's a good enough project, it's good for the community, it's win-win for everybody. Sometimes you just got to get in there and keep swinging the bat, in a polite way. So, Hey, so let's see. I know we probably got a little bit of time left here. I know we got to be sensitive to that, but let's talk about the luxury market. I mean, a lot of people don't pay a lot of attention to that because they think it's out of their price range. The market's too small. But I'm telling you, Donald Trump said this one time in one of his books. He said, if you build the nicest property with the nicest material, the nicest area, people will fall all over themselves paying whatever price you ask for it to be there. And I've observed it myself. But so what's that looking like up in your area, the luxury condo multifamily sector?
Yeah, I mean, he was absolutely right when he said that. It's very true that the luxury condo market in our area it's almost the majority of condos being built, new construction condos, I'd say fall under that category. Wouldn't you, Nick? It's like high price per square foot. I would
go into our Brighton job, maybe tell them a bit about, because that's a luxury, section there.
Pretty much everything we do, and this one Nick's talking about is our largest job to date. It's 32 units, is a parking garage on the first floor, elevator building, views of the Boston skyline. It's in Brighton, so it's near the Mass Pike. It's right near the Mass Pike, almost very close to Fenway Park, and only a few minutes in the other direction to Harvard, MIT, right by the New Balance headquarters. It's a really happening area, and we're hoping there on these condos to achieve $1,000 a square foot or higher. And you're talking 900 or so square foot condos. So these are very high priced units, 2 bed, 2 bath throughout the building. Going to have really nice finishes, really nice appliances, but that's what this market demands. There's other buildings like ours going up around there. And you walk them, you feel like you're in a very luxury building. And there's ways to do it where, our cost per square foot to build rises a bit, of course, when you're dealing with luxury. And you don't really get, an economies of scale situation where you think, we typically have done 7-10 unit buildings. It'll be cheaper per square foot when you go up to 32. It doesn't really work that way. It's pretty much the same, sometimes even a little higher. But we can make sort of the math work out. Everything's really efficient, of course. So with pricing, so there's not a ton of room. But we find when we'll pick a parcel, or in this case, we bought an entitled parcel. The developer who we bought it from had spent 2 or 3 years entitling this in a small multifamily zone for 32 units, big neighborhood process, city process. So he made profit on selling that entitlement to us along with the land. And then we'll make a hefty profit. At least we're projecting, when we sell what'll be 32 condos. And now with this project, it's like I said, it's all luxury. One component which is interesting is the city of Boston requires you to do 13% of any new construction as affordable if it's above 9 units. So a lot of times you'll see a lot of our peers, what we did, you kind of max out at 9, so you had full market rate. In this case, that ends up being 4 units. Are affordable. So based on the price per square foot that we can sell at a market rate for, these 4 affordable units will actually be a quarter of the price of the other units, but they'll be the exact same quality and everything. Yeah. So kind of an interesting dichotomy there, but overall, I mean, goes back to Nick's point at the beginning, the life sciences industry, Harvard, you have very high income professionals in that area. You have a lot of Chinese grad students, PhD students, professors in general. There's a very there's a very high level of demand for units like this. You might not think so when it comes to luxury, but there certainly is.
Yeah. Well, I tell you, we're kind of should start wrapping this up in a minute, but I do have another scale. So scale, when it comes to scaling your business, what would you say to people, somebody, let's say you've got a dentist who's expanding his practice or her practice. They went from, a graduate with one office, one practice, to now they got two or three. They won't get into this, but and you're based on your using your wisdom, the lessons you learned from history and your philosophy, what would you recommend to them, being able to jump into this and scaling their business,
So I think when you're looking at like pure general business advice, the best advice we could give from our experience is definitely a combination of focusing on your strengths and trying to outsource as much of that work that isn't your strength as possible. And by the way, outsourcing all those tasks that are $20 an hour, $10 an hour, maybe even $50 an hour, depending on, where you are at in your evolution of your career. But you want to be shedding, responsibilities to other people. You want to hire people. You want to work with, in our case, like early on, we started off as our own general contractor because, hey, we're going to make even more money if we do that. We build it with a developer and then we sell it. We were the realtor too. We did all the work. And that's nice, but then you can only do one job a year, because you've bogged yourself down with all that. So now we work with general contractors. We're working with the top brokerage in the area to sell our new project Eric was talking about. And we have a team we've built up below us. We have a team of 7 people now. We've got a virtual assistant in the Philippines who handles like tasks on our email and all sorts of different stuff we've got her doing. So just always be looking to have people take the things off of your plate so you can really be the bigger picture person managing the company. Because if, you're the owner of the company, you're the leader. The leader is not necessarily the person like tinkering with each individual task. They're kind of overseeing the whole machine. So I definitely think outsourcing and hiring people is the key. Yeah.
I agree. It's funny. I also have a virtual assistant in the Philippines. His name Tio, and I've been with him for about 12 years. And the guy just
wow,
they're typically highly educated. Great. They speak English well, and they love America. They want some of the American pie too. And so let's help them do it. So. Well, I tell you what, guys, this has been really refreshing, but I want to, for everybody listening, obviously they're from all over, but what's the best way for them, if they want to participate, do you sometimes bring people in and help them realize some of the American dream in the Boston area if they're coming from outside the area or even people inside the area? I'm sure you're going to have some people wanting to speak to you about this kind of thing,
Yeah, absolutely. We, on our website, again, https://winterspringcapital.com. I've written a bunch of educational material. We've got an investor portal if you're interested in checking out our future investments. We're active on Instagram, Winterspring Capital. And Eric and I are on LinkedIn, just under our names, Nicholas Earls, Eric D. Nicola.
Okay. So everybody listen, just remember this. It's Winterspring Capital.com, www.winterspringcapital.com. And then also, of course, if you go to LinkedIn, you'll see Eric and Nick there both. So it's Eric D. Nicola, Dinicola. It's Eric with a C, and then Nick Earls, Earls. Nick and Nick and Eric, I appreciate you guys doing this. This has been fun for me because I love the area up there. I can't wait to get back up there and get some lobster.
Maybe chowder.
Yeah, chowder. Last time I was there, somebody in the tunnel going underneath Logan, a cabbie actually sideswiped me, and he was so afraid I was going to jump all over him. And I said, just relax. It's just a car. It's a little bit of paint, and no worries about it. Gave my card and everything, and kind of let him off the hook. But it's there's good people up there. Everybody listening, if you have not been there, you need to go up there and visit. Lots of history. Go down to Cape Cod, beautiful water. I mean, best seafood in the world. So, and also an excellent place to invest in. So, you guys listening, take care of yourselves. I'll see you next week on the next podcast. Again, make sure you go to the realestatewithgarywilson.com website. Click on the members area, get in for free on the right-hand side, and grab everything you can get free for 30 days. We're talking hundreds of recordings, half dozen books, all kinds of tools and strategies and website links we use for researching people and properties for anywhere in the country. And the most important thing is those coveted investor agents. Okay, that's part of, you heard Nick say they team up with the number one real estate team in the Boston area. Okay, so find your number one team, look for the investor agents and make them part of your team. And Eric and Nick, I'd love to have you guys back on again. Thanks again for your time. I know you're busy and obviously successful. This has been a lot of fun.
Absolutely. Thanks, Gary.
This is great.
Okay, we'll see you on the next podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.